Okay, hi traders, here's a new video. First of all, the risk warning: your invested capital might be at risk. Don't trade with money you cannot afford to lose, and this video is not investment advice. So this video is another binary option trading, binary option strategy video, yes, which I do almost on weekend. Today we have Sunday, markets are closed, yes, and I can, as European trader, I do not have the OTC market available, so I do this kind of recap videos where I'm gonna explain you those kind of trades which I have already done in the past on live trading, yes. And important here is that I refer also to those kind of concepts which I have explained in the ebook to for all of those ones, yes, which are asking me over and over again which kind of concepts should they learn. Obviously, I'm telling you to understand all of those kind of concepts, yes, because they are all important. I would not mention them if they would not be important. That are also the most important ones, yes, and if you understand those ones which I have named and have discussed in my videos about the ebook, yes, then you have almost the knowledge, yes, complete, which you need to do good trading setups. So of this kind of ebook, yes, get this ebook. You'll find the link in the description. This ebook contains the most important candlestick pattern, chart pattern, and binary option turbo trading concepts, market condition, trend identification, rejection, and candlestick math, and a lot of more concepts which can be applied to any kind of time frame, any kind of financial instrument, and any kind of broker. So get this ebook. You'll find the link in the description, and in the description you will find also the link to the Facebook group. Join the Facebook group. So okay, let me do a fast recap and fast overview of those kind of concepts which you need. So I can only say it again and again. Important are those kind of concepts which I mentioned now. How to read the Bollinger Bands and the Bollinger Band and the EMAs, yes, which are telling you what kind of trades you should do, what kind of market you have in front of you. Yes, that is really important. A lot of traders do not know what kind of markets they have in front of them, and that means they do wrong or false trading decisions. Yes, if you don't know what is coming up to you, yes, it's obviously that you will do wrong trading decision or bad trading decision. Yes, only because you don't know about the market. Market is not always the same. Market is changing all the time, yes, and so you should know what kind of market you have in front of you, and that is where the Bollinger Bands, yes, and the EMAs are helping you, but you should know how to read them. Yes, I have explained this in a few, and not in a few, in a lot of live trading videos, what those kind of things are showing you, yes, and I can only say watch these videos, yes, they will give you a nice insight about how to read the EMAs and the Bollinger Bands. So that are also linked in some of the playlists, yes, about how to read the indicator. There you get also live trading examples about those kind of concepts. I will do maybe a few more videos about this if this is necessary. Then obviously how to when to trade and when not, when to stay in the market and when get out of the market, or stay away from the market. Yes, that is really important. This video gives you a hint. Yes, when you should avoid. Yes, you see here the yellow one. Yes, that are the golden times. That is where you should trade, and the red ones here that are those ones where you should stay out of the trade, out of the market. Monday, yes, and also on Friday afternoon if you are not experienced. Yes, and the same is here on the Asia session. That is Asia session. Yes, you see here Asia. Yes, you should stay out of the market if you are doing price action. If you are trading other kind of strategies, yes, and other kind of techniques, then you can still trade also on other session, yes. But if you're doing price action, yes, you should stay out of the market at this time. So, and at this days. So, and then this kind of video where I talk about the purchase time and expiration time, I cannot tell you how important this is. That makes part of the 7th edition ebook, yes, and this is really important because this will change your trading style. This will increase your win ratio dramatically if you understand this kind of concepts about how market moves in the purchase time, yes, in the 30 seconds of the purchase time and in the expiration time. If you understand this, you understand how market has to move, and then you stay out of the bad trading decisions because you know how it has to move, yes. Then this kind of thing here, where I talked about the entry point. The entry point is important. This is for all those kind of traders who are not patient enough, yes. You have to be patient, that you understand to get the best possible entry point will save you about a lot of out of the money if you know how to choose the entry point right, yes, because almost often you get out of the money by hair, and that is the cause of the bad entry point, because you are also impatient, recklessness, and enter immediately into the sharp movement. Yes, it's like running into a knife. That is what this is. If you are a messagist, yes, and you like to be heard, then you don't wait for the best entry point. But if you will do good trades, you should wait for the entry point. And that is what I'm showing you over and over again in my live trading. I always say, if price goes above this level, I will enter into a put, yes. I know already the direction where I will enter, but I wait for the confirmation of the market to give me the best possible entry point to get into the trade, yes. I'm doing this almost, that is the reason why I can recommend to anybody of you to watch almost often my live trading videos, yes. The theoretical part is in the ebook, yes, and in combination with the live trading videos, you get the complete knowledge, yes. So, okay, entry point, I think I do not have to explain how important it is, yes. It's one of the most important things with the movement of the candlestick here, purchase time and expiration time. I have not done for fun the video about the purchase time and expiration time 10 months ago, yes. It was one of my first videos, yes, where I have explained how important it is if you are doing 1 minute expiration time trades that you enter at the right moment of the candle. So then that part about the prediction of the next candle. This is logic, yes, this is common sense. This is what you should understand from your own, yes. I'm giving you the hint, yes, so you should understand this on your own, yes. If a candlestick is not unfolding like you expect, yes, then you should understand that this is a process of elimination. If this doesn't work, it should work on the other side, yes, and that is what this method of elimination, the process of elimination is about, and that is what this is about here, how to analyze candlestick chart and the running candlestick, yes, only based on that what is happening before. So, and then obviously this one here too, yes, which are the trend continuation. You have a bearish engulfing candle. This bearish engulfing candle is telling you what exactly, that there will start a downtrend. If the next candle is not a bearish one, that means the next candle will most probably a bearish one. Yes, that is a 75 to 80% success rate stuff here, only based on those concepts, but you can do this only if you have a prolonged uptrend or downtrend before this, yes. That are the rules for this, yes, and then you get good trading setups only doing by this simple thing. You don't need to understand something, yes, you have to only understand this, and then you will do immediately good tradings, yes. But obviously, what is the key? Yes, you have to be patient, yes, that is important, yes. I can show you everything in my ebook and explaining everything in my videos. But if you don't have this virtues which you need, yes, patience and discipline, you will not get money out of the market so easy. You will let the money there, yes. You will give the profit back to the market, almost those things. You will blow your account, everything. So okay. And then obviously the candlestick, the technical, the trading setup analysis, yes, how to set up. If you are not patient, you will not do this. If you are patient, you will pass through this kind of steps, and then you will enter into a trading setup. You have to practice them. Yes, it's like a recognition of candlestick pattern. You have to practice them, doing this over and over again, so that it will be automatically processed. Yes, if you are doing this over and over over again, you will do this unconsciousness, yes, you will do this by your own without thinking, not even losing one thought of this, yes, you will do this like an automatic process, yes, but you have to start doing this, yes. If you don't do this, you will not do this. It's like if you don't start spotting dojis, yes, you don't see dojis, yes. If you don't start spotting engulfing candles, you will not see engulfing candles. Remember the start when you started watching on the chart. Did you ever see any kind of candlestick? No, you see only red and green candles, and that is what I'm trying to explain you, that you should start applying them, practicing them, yes, studying them, yes, to recognize them, and if you are able to do this, you are able to trade them, yes. That is the real what a real trader does, yes. They trade those things which they learn. So okay, then obviously the power of the candlestick itself, yes, the progression of the candlestick, what the relation of the real body in relation to the wick is telling you, what the real body in what the position of the candle is telling you, yes, and what also the size of the real body is telling you, yes, all those kind of things. It looks really simple, yes, but the thing is that everything of a candlestick has a meaning, yes. That means longer wicks, shorter wicks, position of the closing price in relation to the candle, size of the real body. That are important stuff. That is what you should know. You should know what is a strong candle, what is a weak candle, to understand what market is doing at specific key levels, yes, support and resistance, and that we are here already on the next one. You don't need to know those kind of candlestick patterns, yes, counterattack, meeting line, bearish sash, bearish harami, bullish harami. Do you don't need them? Yes, you don't. You have to need only to understand the concept, and that is what I'm telling you almost often in my videos. You have to understand the concepts. Yes, that hammer here, like this one, the inverted hammer, is the same like a gravestone doji. The hammer here is the same like a dragonfly doji. That is what you should know, and then you know, okay, the lower shadow is the support, the upper shadow is the resistance, and you see it's almost the same, dark cloud cover, bearish engulfing candle, evening star, blah blah blah, everything the same. Almost the resistance is above, and the support of the lower wicks and the real body is the support. That are the rules. That is what you should know. Okay, so we have to do a little bit more fast here, because I'm it's already a lot of times passing by. So then we are getting here to the major support and resistance level, the change of polarity, support and resistance. Yes, support becomes resistance, resistance becomes support. That are things you should know, yes. And then obviously major support and resistance, and minor support and resistance, and where you have to do your trades, yes. You do your trade on major support and resistance, and this support and resistance is not only horizontal lines, that are almost every kind, trend line, Fibonacci level, EMAs, whatever, yes, that is what it's important. So, and then obviously the market condition stuff, yes, how you recognize an uptrend, what is a ranging market, yes, and what is a downtrend, yes, and then those things which I show you over and over again here with the highest probability trading setups, reversal and retracement, the 4 keys, yes, the trend, the key level, the candlestick pattern, and the rejection, and that the rejection is only a small part, because a lot of traders do lose, and they tell me and they ask and they send me emails, how can I spot the right rejection, yes, and I can only say the rejection is only a small part, yes, the rejection is a confirmation, yes, but it leads also sorry, it leads also to a bad entry point, yes, and that is what it's so important, that you can miss the rejection for a better entry point. That is like the exchange. That's one hand and another, yes, and that is important that you have the right balance, yes. Sometimes it's better to Don't wait for a rejection and enter on a better entry point if you know if price will move in this kind of direction. If you have at a key level, it's obviously better to wait for a rejection to see if this kind of support and resistance level is still holding. But mostly rejections are used to trap those traders. Yes, okay. So, and that is why it's called the real and the proper rejection and a false invalid rejection. Yes. So, okay, that was not a smooth overview of those kind of things what you should know, and at least, and but last and not least, the candlestick math and all kind of chart pattern and candlestick pattern, and most important, in my opinion, one of my first videos, those videos about the the mindset, yes, where I have explained to you what do you need. And most important one is this one here, where I talked about the about what you need, and that is this one here. Yes, to be consistent profit, you need D exponential 2. Yes, D is discipline divided emotion. Yes, and then you get consistent profit. And because D exponential 2 is this, yes, it means that is what you need really. Yes, and discipline is nothing else than patience. Yes, and control, self-control. Okay, so that was this smart overview of those kind of concepts which I have explained in the ebook. You see how important it is. You will not learn this kind of stuff in one day. Yes, you have to dedicate yourself, and now we are going to discuss those kind of video which I have explained here. So here is the video. Yes, we have here, let me show you some things which I have explained to you before. We have here a Bollinger. Here is a consolidation area. You can expect that we got here before a breakout, a Bollinger squeeze. Then we get a consolidation. We get another breakout. After this breakout, we are getting here in some kind of ranging market. Here we have a 50 EMA pullback in form of an evening star. You see here the fake breakout, yes, because we have here ranging market, price reversed immediately at the Bollinger Band. Yes, that is also one thing which I have explained in the ebook where I talked about the Bollinger Band. So see how important those kind of stuff is to understand what kind of market you have in front of you. That's only by seeing that the price will reverse immediately at the Bollinger Band. You know already, okay, we are here in a ranging market. So price moves up. We got here a pullback. Yes, so and that was it already, and we have a slightly uptrend. This slightly uptrend is formed by a major uptrend because you see here the alignment of the EMAs. We have a 200, the 100, the 50, and the 20, all in this kind of and price is above the 20, so we are in an uptrend. So okay. And that is it. And as soon as I enter into a trade, I will stop the video and explain what's going on here. So, okay, we have here an engulfing candle. So, and this is also important. I enter immediately into a call. Yes. And why? Because this can be done, yes, because in general, I should have waited till price moves down to this area here, where this previous candle was, yes, and then after the rejection, I would enter into a call, yes, but because we got here nothing else than the last kiss, yes, it's the last kiss here, you see, price breaks out, yes, of this support and resistance, got pulled back here to this level. This candle with this wick is showing me huge buying pressure, and that was the reason why I entered immediately into a call instead of waiting of the rejection, yes, because I understood already we have here buying pressure. And that is what candlestick patterns are telling you if you understand this. This is a specific part or specific form of engulfing candle, a bullish engulfing candle in combination with a rocket candle here or hammer, yes, which gives the all overview candle much more power. And that was the reason why I entered immediately into a call. That is important to know, yes, because you are right. I could also wait till price move down this level. But if you get such kind of candle, you can expect that price will not move back to this level. Yes, and that's the reason why I entered immediately, because this candle here is showing strong buying pressure. So I will fast forward a little bit because I have done already so much. So, okay, price stopped at this level. Yes, price stopped at this level. We got a nice huge candle. This huge candle has a nice upper shadow. Yes, and because you see here what I have to explain you here this again. Yes, you see here this flat Bollinger Band, this means we have here support and resistance. This is resistance. This is resistance. Yes, here we have support. Sorry, here we have support. Yes. And here you see the change of polarity. Yes, here you see a lot of wicks. Here, resistance, 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 support. Yes, resistance again after breakout. Here, support. Yes, and that is ranging market. Yes, so okay, that is only to show you this. So I will continue. I entered here into a put because I understood from this ranging market and this wick here of this previous candle, yes, because it was also a huge candle, yes, that we are getting here now into a retracement. I was not sure, or I didn't know if this will be a reversal. I was only expecting a retracement because of the change of polarity, because of the wick. Yes, upper shadow here, which is bigger than the lower wick, which shows selling pressure, and that's the reason why I entered into a put. So, and after this, we got here nothing else than a shooting star. This candle showed a reversal at the 1 deviation Bollinger Band. That is what I have explained exactly on the ebook. Yes, so if you have a ranging market, yes, you can expect that price will reverse like here, yes, at the Bollinger Band. Yes, here not because we were here still into an uptrend. Yes, but in this ranging area, you see we get here almost consolidation areas at the key levels. Yes, and that was the reason why I entered here immediately. I didn't wait that price got up because this candle here was showing me strong selling pressure. Yes, that is you should understand when you enter into when you try to enter above or below the closing price. Yes, and you try to enter above or below the closing price if the previous candle is almost weak and showing weakness. Yes, but if you have strong candles which showing strong power, you should almost enter into trend continuation trade immediately. Yes, because price is also so that if you have strong pressure, the candle moves immediately fast forward down, yes, and will not retrace back, and so you will not be able to get an entry point. But I still often better to lose or to miss a trade, yes, instead of entering into the wrong or entering too early and then get out of the money. So that was already. If you like this video, do a like. If you didn't subscribe to my channel. And if you have something to say, drop me a line in the comment section. So bye bye.